The United States Securities Regulator on Wednesday approved the first US-listed exchange-traded funds or ETFs to track Bitcoin. Its chair, Gary Gensler, said in a watershed for the world's largest cryptocurrency and the broader crypto industry. The agency approved applications including from BlackRock, ARK Investments, and 21 Shares, Fidelity, Invesco, and VanEck, among others, according to a notice on its website. A green light marks a U-turn for the SEC, which for a decade rejected Bitcoin ETFs due to worries they could be easily manipulated. Hopes the SEC would finally approve Bitcoin ETFs surged last year after a federal appeals court ruled that the agency was wrong to reject an application from Grayscale Investments to convert its existing Grayscale Bitcoin Trust into an ETF. That ruling forced the agency to re-examine its position. In a statement, SEC Chair Gensler said that in light of the court ruling, approving the products was the most sustainable path forward, but added the agency did not endorse Bitcoin, which is risky and volatile. Some products are expected to begin trading as early as Thursday. The products, a decade in the making, would be a game changer for Bitcoin, offering institutional and retail investors exposure to the world's largest cryptocurrency without directly holding it, and a major boost for a crypto industry beset by a string of scandals. Standard Chartered analysts this week said the ETFs could draw $50 billion to $100 billion this year alone, driving the price of Bitcoin as high as $100,000. Other analysts have said inflows will be closer to $55 billion over 5 years. It's a huge positive for the institutionalization of Bitcoin as an asset, said Andrew Bond, Managing Director and Senior Fintech Analyst. The ETF approval will further legitimize Bitcoin, he said.
So I think it's another key step forward in the development of what is still by far the youngest, smallest, and most retail investor dominated of all the asset classes. And it's happening in what is by far the world's biggest capital market. And regardless of the reaction that we get, whether it's sort of sell the news or whether it's euphoria, let's just recognize this is just one of what I think is a long laundry list of potential asset class catalysts this year. I mean, next up, we would have the Ethereum spot ETF decision, and then we move on to the April Bitcoin halving, on and on, any one of which I think is important in the context of what is still a very small asset class. Well, the bullish narrative is that this is a new big on-ramp to crypto, which is going to attract a lot more investors, and ultimately that's going to push the price up. The sell the news camp says this was by far the best performing asset class in the world last year. The Grayscale Bitcoin Trust discount to NAV, which is our sort of proxy for sentiment, has gone from 45% discount to 0. That just tells us there's an awful lot already baked into the price. So I think it's going to do 3 things. I think people that already own crypto may decide to sell the way they own it today, whether it's the futures, whether it's the Grayscale Bitcoin Trust, whatever it may be, and switch to the ETF because it's just easier and cheaper. So I think that's 1. 2, the retail investors that don't own crypto today may well be getting a call from their financial advisor saying, now we have this new product, it's easier, it's cheaper, maybe you consider a small allocation. I don't think that's going to be the big sort of game changer. It's already an asset class which is very, very well owned by retail investors. But I'd also think you're going to see institutional investors start to nibble at this sort of new, easier on-ramp to crypto. So I think those are the sort of 3 impacts. The end result, I think, will be just more people owning crypto than they do today. Whether it's the spot ETFs for Bitcoin, Ethereum, the Bitcoin halving, the Fed cutting interest rates, We have accounting changes, which are going to make it easier for companies to own crypto. We've got bank regulatory changes that are going to make it easier for banks to own crypto. I fully expect in the fullness of time, central banks to start owning crypto as part of their FX reserves. All this, I think, is just the sort of gradual, natural development of what is a very young, a very small asset class.
Bitcoin has gained more than 70% in recent months on the expectation ETFs for the asset would be approved.